Welcome to Opalesk TV. My name is Matthias Knapp. I'm the founder of Opalesk. Today, we are diving deep into the world of hedge funds, together with Vincent Weber, who has been researching hedge funds, I think, for the last 20 years, because that is how long we know each other, right? So there are over 10,000 hedge funds out there, and Vincent will help us to cut through the noise. So Vincent, thank you for being here.
Thanks for giving me this opportunity. So I'm really excited to walk everyone to our approach to hedge fund investing.
So Vincent, tell us, how did Resonanz Capital get started?
So I spent about 15 years managing hedge fund portfolio. So everything from offshore investment to UCIT or QIS, quantitative investment strategy. So more or less, if it's a long-short strategy, I've dealt with it. And over time, I realized, how tough it can be, for all sort of investors, be it like small or large one, to get the most out of these strategies. And in 2019, I teamed up with a team of experienced allocator and a quant researcher to set up Resonanz Capital. So we all share a passion for investing and data analytics. And with the backing of a few of seasoned investors, we just launched. We were the new kid on the block. So from day one, we commit to a tech-focused approach to stand out.
So Vincent, I'm wondering, from your perspective and from your experience, what's the biggest issue in the hedge fund space?
So honestly, there are tons of options out there. Hedge fund, liquid alternatives, QIS, you name it. So not every option is going to fit every investor. So sure, obviously, there's a very strong consensus among a handful or top hedge fund name. But behind this, I think you will notice that opinions are all over the place, And let's face it, many firms don't have, neither the interest nor the capacity to really shift through every possible opportunity, meaning they can really miss out on some, promising investment. And on the top of that, I believe the due diligence process, can still feel pretty, old school. In the case of hedge fund, still a lot of manual checks and paperwork, and that's where we step in, streamlining how investors approach the selection and the monitoring process, so they can feel more confident about their choices.
Right, Vincent. So you've mentioned hedge funds, liquid alternatives, and QIS or quantitative investment strategies, which are, of course, three totally different universes, right? So most of our audience already knows the basics, but I just thought, let's focus on the key due diligence considerations, the potential alpha and liquidity or governance trade-offs that come with each of those. Could you please go into that?
Let's start with hedge funds. So even if you are familiar with the usual points, so okay, higher alpha potential, higher fees and less liquidity, it's worth noting that like good due diligence is still absolute key, because hedge funds are private investment, and so you really need to keep gathering all sorts of documents, provide insight, track performance. So do a serious homework on a regular basis. In return, you may get access to strategy that are tough to replicate elsewhere, but you will face more challenging governance and tighter liquidity. So talking about liquid alternative, so yes, think of those as hedge fund-like strategy in a more friendly, more regulated format, often offering daily or weekly liquidity. So that makes them easier to invest, but typically they come with some lower Sharpe ratio. this means they might require more frequent rebalancing, but still they tend to be simpler to analyze, given that big part of the rules are already determined by the regulator. And the third one, quantitative investment strategies. Here you're basically putting on a trade in a rule-based strategy. So the nice part is fully transparent. You know what the chains are going to be. But on the other hand, like with any trade, you have to check cost, transaction cost, funding cost. Another aspect with QIS. And there's a lot of those are produced. There have been new QIS come regularly to the market. So you always face the question: okay, do you buy a new strategy which is based on a pro forma index, or do you prefer to emphasize more established strategy with a longer track record? So there's a trade-off which comes to that. So obviously a longer life track record give you more confidence, but at the same time you might miss out on some more tactical opportunity. So overall, in the case of QIS, I think this is a very good option. If you like systematic strategy, rule-based investing, but at the same time, keep an eye on the transaction cost, and then also you need a framework to balance this trade-off between life and pro forma performance.
Right. So let's look at the universe of the liquid alternatives. From an institutional investor standpoint, what are some of the biggest challenges looking at liquid alternatives?
So first, performance persistence tend to be weaker for more liquid strategy. So I mean, you've got to be more tactical. Unless with big hedge fund allocation, you can just park your money for years and walk away. So upside is that this vehicle tend to be more liquid. You have daily or even weekly liquidity. So if you have the right system in place, you can really take decision and pivot faster. Second, there is a chance that your absolute return might end up a bit overwhelming. So if you put 100% of your capital into a basket of uncorrelated liquid alternative, you will experience a very strong risk reduction. So you might get a nice swap ratio, but your overall return profile is going to be the same. So that's something where a multi-manager platform got a big advantage, because they are much more able to gear up the overall risk level, up or down, depending on market condition or opportunity. A solid workaround here is to combine liquid alt with QIS solutions. Because QIS, as derivative-based strategy, can be easily customized, and so you can use them to scale your overall risk level up and down. Think of it, essentially, acting as a kind of tactical overlay that allow you to boost or reduce your overall risk level whenever needed.
Oh, yeah, that's fascinating, right? So we've seen that each of those three buckets, hedge funds, liquid alternatives, and quantitative investment strategies, they all have their benefits and advantages, but also some challenges, right? So that makes it, I would say, hugely complex, right? If, as an allocator, you want to get the best out of those three universes in one portfolio. And I was wondering, how does Resonanz Capital handle this complexity?
We really center our process around three key ideas. The first one is we take a portfolio approach. What does it mean practically is we try to aim for a stream of 10 to 15 uncorrelated investment in our portfolio. So it might sound easy, and I would say yes, maybe it's easy to find 10 to 15 investment which are uncorrelated to the S&P 500, for example, but it gets much more tricky when you try to find investments which are decorrelated between each other. That's really where the challenge starts, and this is what we are trying to solve. Second part, continuous benchmarking. So I think this is really the bread and butter. Again, so we are reviewing each investment on a continuous basis, weekly, monthly, or even daily, depending on the type of investment, to make sure, it deliver, as promised, which means, uncorrelated return, superior risk-adjusted return compared to its peer group, and all that also with appropriate terms. It sounds boring, but I would say it's the most controversial part of our job because it means we tend to focus more on hardcore number as some type of investment narrative or war stories. The last part, the third element, is substance over form. So for us, whether let's take the example of a trend following strategy. Whether it's packaged as a managed account, as a usage, or as an index, for us it's the same. At the end of the day, it's the same thing, it's the same idea, and I think recognizing that mean we can adapt or position our strategy more precisely. And so these are the three concepts. To put that to practice, this is we develop ensemble, and I like to call it a bit, or this is our secret sauce. So this is our proprietary technology platform, and you can think of it like having a team of analysts on demand, which consistently monitor your portfolio, looking for new opportunity and for optimal rebalancing. And maybe one last point on that, because we talk a lot about of data analytic and quantitative analysis. So yes, we are big fan of it. So behind the scene, we use a lot of AI. So that the big buzzword for us is to give you some example. Everybody's talking about LLMs, so large language models. So we'll use a lot of LLM, mostly, for example, a lot on the hedge fund side, where they can be very helpful for the qualitative work, shifting to tons of document. And then on the other hand, when it gets to doing like a prediction or portfolio construction, we will rely more strongly on classical machine learning technique.
Let's go back to your firm, Resonanz Capital, and tell us about all the core services that you deliver to your clients.
We break it down into three categories. So the first one is what we call advisory solution, and we provide tailor-made guidance on investment and portfolio construction. The second one is our ensemble technology solution, and I think this is a user-friendly analytics platform which really give you, think of it as your on-demand investment team. And this is targeted at investment who want more hands-on control on their process. And the third one is a usage strategy. So we are rolling out a usage strategy that offers daily liquidity and tap into different quant strategies and external manager. So effectively bringing top-tier tactics and method to a bigger investor audience.
So can you share a recent success story or a milestone that you have achieved recently?
We recently partnered with a large wealth manager to develop what we believe is the first open architecture QIS usage strategy. So basically our approach screen the market for the best QIS and usage opportunity from a wide range of provider. And what's cool with it is how we combine a dynamic, diversified approach, similar to what multi-manager funds are doing, with the investor-friendly using framework. And like to stress importantly, so we are not sticking to the usual option like buying fund shares or package usage or manage account, but we are also using QIS, which is the corner of Wall Street, which typically reserved so far for the bigger players. So I think this way we are really bringing, I think, advanced strategy to more investor minus many of the usual hurdles.
Right. So I think that's a real breakthrough. That's really interesting. Now I'm wondering, where do you see Resonanz Capital going next?
We are always refining our ensemble platform, so to serve a wider array of investors, whether they are large institution or newcomer to hedge fund or QIS. And we also keep exploring new fund structure and research partnership, that make sophisticated risk management strategy more accessible. So in short, we want more investors to feel at ease with alternative strategies.
So I was wondering, how do clients usually describe working with you?
So a lot of them highlight the performance. I mean, as professional, as a team, and as a company, we've been around for a long time, and we've had quite a few investors, either meet or exceed their investment target. But they also love how we blend, personal guidance with technology, giving them a clearer view of their portfolio. So one client once told me, Vincent, we are finally comfortable expanding our hedge fund program, because we actually understand what we own and why. So, and that pretty much sums it up. So it's not just about the returns, it's also about peace of mind and trust in the process.
Oh, that's fantastic. Vincent, if somebody wants to know more about you, about Resonance Capital, what you're doing here, about your ensemble software solution that you have and the new offerings, including QIS, etc., what's the next step?
Yes, so check out our website. So we've got article and white paper that really explain our approach in detail. You can also sign up for a free trial of Ensemble if you like to experience firsthand how the platform works. So whether you need a portfolio review or are keen to explore alternative, we are here to help.
Well, let me come back to your point to give out a free trial to your Ensemble platform. So I've seen it, right? I've visited you in your Frankfurt office. I've seen it, and I was blown away. I think everybody who watches this video and who is doing institutional allocations to hedge funds, UCITS funds, QIS, etc., should take a good look. So, Vincent, that was super enlightening. Thank you for taking your time, and all the best.
My pleasure, Matthias. Thanks for having me today. And you and everyone is always welcome to visit us here in Frankfurt.